What's good, Trading Dojo? Welcome back to another price action episode. In this specific episode, we're going to be focusing on breaking down the PM session. Now, I personally trade PM session almost even more than I trade the early mornings, just because for me that is pretty early in the morning, and I don't like to stress myself over taking a trade, right? If I get up, then I'm up to trade the silver bullet at 10 a.m. If I'm not, no worries, I'll trade the afternoon because I have various different models for me to enter with high probability in the afternoon. Now, talking about the PM session, let me pull it up right here. So there are two different ways to split it up. That is looking at the lunch hour, which is the transitioning hour from AM to PM, which starts at 12. And this is focusing on the significant liquidity that's created during this hour. The second way to split it up is the silver bullet. I don't honestly remember which hour ICT specifically characterized. Either it was 3 to 4 or 2 to 3. I just kind of expanded the grasp because I found a lot of setups from 2, and I don't want you to limit yourself only to those specific hours, right? The idea is that if it is from 3 to 4, the idea is that this is already approaching the close of the daily candle. So price actions likely, if it's out of place, it's going to start rushing. And we called a model that we made the rush hour. That's because it's the hour that it rushes towards the destination that it needs to be at in order to close. And that's where this comes in, right? The power of 3 of the daily candle. This is what you look at to kind of determine where the daily candle is going to close and your direction or bias for these two trades. I'm going to assume that you already know what macros are. If you don't, join our Discord. Free Discord, join our free live streams, and watch how we use them. So I'm going to kind of break down the theory, and I want you to dive into your charts yourself. But basically at 12 o'clock, there's going to be some sort of significant liquidity. Either there's going to be a high right at 12 and then it melts off, or it's a high that's created later into the 12 o'clock hour and then it melts off. If these conditions kind of align and it does actually give you the melt off, then once it approaches 1250, let's just pretend that this right here is 1250. Then at 1250, you look for some sweep of liquidity. And once you get that sweep of liquidity, you kind of have this narrative that is going to run and sweep the significant high that was created during the PM session right here, which would be the lunch hour buy side. And that's kind of the characteristic of lunch hour, is that it creates some sort of liquidity. Another significant hour that you need to know is 1:30. Because 1:30 p.m. is the close of the lunch hour. That's when lunch ends. And that's when kind of the algorithm stops pushing towards where lunch hour was pushing, right? The algorithm stops, and then it allows you to actually start targeting the highs that were created, the liquidity that was left untouched during the lunch hour. And that's kind of the model that I've been trading most of the time in the afternoon. That's the first way to look at it. This is a model that you can add to your trading system. You basically look for a trade within this time period from 1250 to 110, which is our macro, and you use that macro to run and sweep that liquidity. If the macro starts consolidating, you simply don't have a trade, you avoid it, you try to target it later during the 1:30 p.m. close. The reason why it's 1:30 is because this is the opening of the next 30-minute candle, right? And when that 30-minute candle opens, this is the 30-minute candle right before 2 o'clock, which is when we start transitioning over to our silver bullet time. In the silver bullet time, like I said, it's the rush hour. This means that on the daily time frame, you find some sort of objective, like looking back at past daily candles. You sort of want to find some sort of objective, like where the daily candle wants to close at. Typically, if there's a fair value gap and it's pushing somewhere towards the midpoint of the fair value gap, it's going to close somewhere near the midpoint. So your objective would be kind of just to aim for the daily candle to trade to the midpoint and close there. Just because we've been ranging on gold the last few days, it's not the best to demonstrate that. Okay, this is a pretty good example. Like on the weekly chart, where was it? Weekly. I think it was just on the regular NASDAQ. Yeah, there you go. Okay, so say for example, we have a fair value gap on the weekly time frame, and your objective was for it to close at the midpoint. So if you're out of place on top right here, then you can be selling towards the midpoint, right? Because you're expecting it to close somewhere around the midpoint. And your daily objective for that last day of the week would be either to push down, or in this example, we were kind of pushing up. You can see that the last 2 days, Wednesday and Thursday, were below the weekly FEG somewhere down here, and its objective was to push back up. So Friday was really bullish and it ran up and closed somewhere around the midpoint. So on Friday on NQ, you could have been using the silver bullet in the afternoon. Look, let's see when the move started. You see 2 p.m. 2 p.m., right? We're out of place. We're consolidating around this fair value gap that we actually respect. You can see that the bodies sort of stay within the bottom of this fair value gap. And then we start running up. Boom. New fair value gap gets created. We might have barely tapped into it right here. And then our move towards the midpoint begins. This is also 12:45, which is the highest point created during lunch hour. So you have 2 different targets that you could have taken partials at. You could have taken it at the lunch hour buy side, created during 12 o'clock hour, and then you could have taken your next partial or closed the full position at the midpoint of the weekly FEG. So that's kind of the theory behind the power of 3 and splitting the PM session into 2 parts, right? You look at the silver bullet, which is the rush hour silver bullet, running toward where daily/weekly candle wants to close. So you only look at where the weekly candle wants to close if it's a Friday. If it's another day of the week, you're only looking at where the daily candle wants to close. That's the silver bullet. And then for the lunch hour model, lunch hour rate is what we call it, you have the significant liquidity from 12 to 12.50. There you go. 12 to 12.50. Then you have the 12.50 to 110 macro, aiming for that buy side. If you get the buy side swept, then you can sell, or if you get the sell side swept, then you can buy to the untouched buy side. And lastly, the 1:30 p.m. lunch hour close, which also gives you an opportunity to trade from that hour if it does happen to close in a good 30-minute spot. Keep your eye on the 30-minute time frame at that level. See if there's an order block, something that price can reference. That's going to be all for this video. I hope you